Yesterday, Rachel Reeves delivered her long-awaited budget, nearly an hour after the Office for Budget Responsibility, or irresponsibility in this case, accidentally published their report findings and leaked the budget headlines. My name is Robin Moore and welcome back to this week's episode of Tax Tidbits, where the budget was full of tax reforms and changes across the board, from cost of living support, welfare reforms and personal tax changes. So let's dive into the biggest announcements that you actually need to know about, saving you from the 150-page headache that I had to endure. Has anyone got any painkillers? Let's start with the cost of living support, because that's what's been stressing everyone out. The government is planning to knock around £150 off of household energy bills from April 2026. They are doing this by picking up most of the tab for something called the renewables obligation and scrapping the energy company obligation. This sounds like a bunch of rubbish, but these costs are currently passed on to our bills by energy suppliers. So by scrapping them, the government hopes that these companies will pass on the savings. Also, for the first time in 30 years, rail fares in England are getting a one-year freeze from March. If you're a commuter, this could save you up to £300 next year. Prescription charges will also be frozen at £9.90 next year. On the income side, the national living wage is going up to £12.71 an hour from April. That's an extra £900-ish a year for a full-time worker, and for pensioners, the triple lock is sticking around until the end of Parliament, despite its high price tag. Moving on to welfare reforms, the government is investing over £1.5 billion into employment and skills, which sounds like a lot, because it is a lot. The standout here is the youth guarantee. Under this scheme, if you're aged between 18 to 21 and have been looking for work for 18 months, you will be offered a guaranteed 6-month paid work placement. It's meant to help young people get that first step that everyone struggles with on job applications. Apprenticeships are getting a boost too, especially for small and medium-sized businesses, with fully funded places for eligible under 25s. The Motability scheme is also seeing some changes, as they're removing luxury cars from the scheme, which honestly makes sense. No one needs a leather-trimmed massage seat to go to Tesco's. They will also remove the overseas breakdown cover from their leases and reduce their lease mileage limit. This will bring Motability leases more in line with leases available commercially to most people. Lastly, Labour's big headliner this year is the end of the 2-child benefit cap. This means that families can claim universal credit or tax credits for all children. This is expected to lift nearly 500,000 children out of poverty, which is the biggest child poverty reduction expected in a parliament since records began. So it's genuinely a massive shift. Now onto personal tax. Income tax and national insurance thresholds are staying frozen until 2031. Yes, 2031. This is 3 years longer than the current freeze and has been put in place so that more people are pulled into higher tax bands as their wages increase due to inflation. A few actual tax rates are rising too. From 2027, property income is getting its own separate tax rates of 22%, 42% and 47%, depending on your tax band. Dividend tax rates are going up by 2% from this April, and savings income will follow with its own 2% increase from 2027. Pension salary sacrifice is also being capped. From 2029, only the first £2,000 sacrifice will be NIC free. Anything beyond that gets treated normally. Before you panic, 3/4 of basic rate taxpayers won't be affected. It's mainly aimed at those sacrificing eye-watering amounts that the rest of us can only dream about. There's also a new high-value council land tax surcharge coming in from 2028 for homes worth over more than £2 million. Charges start at £2,500 a year and will go up to £7,500. It will affect fewer than 1% of homes, so if you are in that bracket, congratulations, and I'm sorry. And finally, EV drivers, your tax-free journey is officially ending. From April 2028, there will be a new mileage-based tax called Electric Vehicle Excise Duty. It will work alongside existing VED and will be charged at 3 pence per mile for electric vehicles and 1.5 pence per mile for plug-in hybrids. This will come in at around £240 a year for the average electric vehicle driver, which is roughly half of the fuel duty paid by petrol or diesel car owners. Other vehicle types like vans, buses and motorcycles aren't included in this scheme yet, because the transition to electric power for these types of vehicles is currently less advanced than for cars. And that summarises our Tax Tidbits budget special. I've given you a lot of changes, a lot of numbers, and hopefully a slightly clearer picture of what's coming over the next few years. If you like this video, don't forget to subscribe to our channel and hit the notification bell so you don't miss any of our videos. See you here next week.